Well, good day, traders. I trust you're all well and that you're having a good time. I thought, well, you're having a good time on the market. I know you're always having good times in life. I thought we'd share something with you that took place yesterday. So I think you've heard me say that the way I trade red news is the same way that I would trade surprise candles. Now, red news, you can pretty much know if you keep track of all the calendars that are available to you. Forex Factory, FX Street, just these different calendars is one that I use. I'm not going to offer now to keep track of news that affect Hang Seng on the China calendar. So you can anticipate when things are going to take place, and you can make the decision. Do I stay in the trades that I'm already in, or do I exit the trades? And you know my rule, one red news announcement. If I'm not going to be trading, I'm out of the market 30 minutes before, and then just, multiples. I don't care what the news is. If it's affecting the chart I'm trading, if there's 1, 2, or 3, I'm just multiplying by 30 minutes. Then I can decide whether to be in the market or not. But what about surprise candles? Well, if you knew when a surprise candle would take place, then it wouldn't be a surprise. So this took place yesterday. This was on gold, 5 minute. And I mean, it looks pretty much like a red news candle, but it was not a red news candle. It was a surprise candle that just appeared. And, as it started doing the stuff and bouncing up and down, going up and coming down, I said to myself, hey, George, hang on a second. You have probably missed something as far as the news is concerned. And I flipped through all of my charts, Forex Factory, FX Street, China, nothing. So I said, okay, this is a surprise candle. Now, there's ways to trade the surprise candle, and I'm going to talk to you about that. So this took place real time. So just before I got to that, let me tell you how I was trading the market. So with a bear breakout, and that red line is the low of yesterday. And with the breakout that we had, the fact that you had a breakout candle and then immediately followed by a bull low test candle, just there, that too tells me that this is a failed breakout, and there's likely higher probability that the breakout, just finding my pointer, higher probability that will get back above whatever level. In this case, it was a high of the low of yesterday. Then with the 2-bar reversal, went back into it. Now I was thinking, okay, based on my read of the market, there is this key level, which is 2000. Everyone's been watching that. It's been pretty influential. It's still influential today. So I was keen to see how strong the bulls were. So although the bulls are strong, they have failed the breakout. So I want to find ways to get into the market. So what I wanted to find was any significant kind of high-low double bottom. So I saw all of this build-up of bull candles, saw that tight trading range, didn't see strength by the bears. So, when I got, so that's a little bit of a micro wedge, 1, 2, 3, market went down, or you could just call it a double bottom. And when I saw that outside candle, I said to myself, okay, buying above an outside candle is a low probability trade, but I'm going to put an order above there. And of course, my stop would have been down here. That's the key technical level. And then I'll just look at whatever was 2000. So I'd worked it out, my stop would have been down. This is if you look on the daily, the market has been in a channel, a bull channel. So this is low of the bull channel. I probably should have marked that down. So multiple levels of support, right? That's the low of the day. This is the 50% extension, 2000, another key level from the daily and the channel. So I was pretty happy to buy there and just put a stop down in. But I was not triggered. Now, for those who know the way that I trade, it's very rare for me to place orders in the market. And there's nothing wrong with it, because I prefer just to have a look at the market, and as it starts to go above it, then I would to buy. But because I'm buying above an outside candle, I wanted to make sure that the market is actually going my way before I took the trade. So I was not triggered into that particular trade. I said, oh, okay, that's pretty disappointing, but let's wait. We are not in the trade. I'm gonna wait to see if I get another opportunity. I had the second attempt by the bears to break, well, there was a second attempt, failed, third attempt, failed. Then when I saw that outside, can I say, well, I'm gonna put an order above that. Because if the market takes that all out, there's a chance that the bulls will get above here and maybe come out the breakout pullback. Again, I was not triggered. So when I didn't get triggered there and I came down here, I decided, I'm gonna wait. Twice I've not been triggered. The bulls are not strong enough. I don't wanna just get pipped into a trade and nothing happens. So I saw that, and as that formed, I thought, if I get a breakout pullback, I am gonna buy. And while I'm doing that, I didn't even have time to take coffee, waiting for the pullback. The market just started doing this stuff. And that's, I was like, man, is this a news breakout or what happened? When I realized it was a news breakout, waited for it to close. Now my whole thesis on the left was still valid. So based on that, I was trying to find ways to get into the market. As soon as that closed, I went and bought the market. Remember, my stop is still down here, but it failed. And as soon as it failed, I said, oh, this thing might go wrong. Now, you can see what I've put here, scalp trades. I don't scalp as a rule, but I can decide to, I know how to scalp. So I went in scalping mode, hoping to get huge acceleration up, which means as soon as it fails, I got out. So I got out of that trade and break even. It created a tail, started going up, immediately jumped in and bought. I was having fun. I do enjoy. When I get to scalp, I do enjoy the scalp, take the trade. Stop still in the correct place, risk reduced, took the trade. When we got to here, I thought, hey, top of the trading range, I was hoping that the bulls would just get above here. They failed to get above here. I didn't close the trade because I'm scalping. Happy with that. Had we carried on selling off, I would have. Then, there's a little bit more up, and I thought, oh, this is fantastic. Maybe the bulls are just going to keep going up, up, up. And of course, it didn't happen. As it started to turn, because I'm scalping, I just got out of the market. So, I thought I'd share how I responded to, that surprise candle. Now, had this been news, you wait. Remember the rule that we speak about, not the rule. One of our red news strategies, if you're going to sell, look at where the market has got to, test of the open of today, first attempt to sell off, you wait for the second attempt. As it was, that was going straight into the pre-market US Open. And now I need to trade 12 hours, which takes me from Hanks and Open to just before the news. So I got out before that. Let me see the points, question. After that, let me show you what happened for the rest of the day for those who traded the US markets. Now, I think part of the reason for putting this for me is just to show you that irrespective of which session you trade, there are always opportunities. So for those of us who would have been trading into the US session, you would have been rewarded with this sell-off. Now, this is a small pullback bear trend. I put bear there because I use the same acronyms for the bull, small pullback bull trend, where the market is just going up in very little pullbacks. It's very difficult to trade. So LPT, you have to have low, you have to know that every trade you take is a low probability trade. The market could just trade, but the market is going down. So you need to execute the trades. So your market is going down and you need to execute the trades. Take at least one trade with small risk. Now, I exited here And I basically shut my laptop and went home. I'm working off a business park. Isn't that such a pity? I love working from home, but South Africa is having such a problem with electricity grid power because I've had to come into a business park for the first time in years. That part I'm not enjoying. I enjoy working from home, but still, work is work and absolutely fantastic. In any case, so you would have been trying to find ways to get in a classic trade that a reversal structure look for is the first low one. We want the market to resume up, come and test up here. When you look for the second opportunity to short, that's when you would have been trying to find ways to get short. But we did not get that. In fact, the market just carried on with trading range behavior, two-sided price action all the way down here until you got to the low of yesterday. Now, you had a first attempt here, failed. Second attempt, failed. You had a third attempt, pretty good until it failed once again. Now, the bears are coming again with successive lower highs, and they have a breakout beneath the low of yesterday back in that trading range. They have a pullback and they have a test here. That's where, if you want to jump in, you can start to look for ways to jump into the market. Now, remember, absolutely important. Until you get this breakout, you are scalping. You're taking scalp trades. So you can sell beneath the candle. And if it starts to reverse, you can get out. Okay. So you could sell this with scalpers, you have a full day. I'm sure scalpers will probably say, hey, George, you could have taken, you had done a lot, maybe they would probably still buy above it, but I didn't. So anyway, all the way down here, you can be selling. But where do you sell with a small pullback bear trend? Every time the market gets to test the EMA, remember, I use the 10 EMA as an indicator of the strength of a trend. If you just have a quick glance at this, all the way down here, way into the US session, probably about 5-6 hours into it, the market just stayed beneath the 10 EMA, which means the bears were pretty strong. So you just want to wait for the market to come to the EMA and find a trade that you can take. That pullback test of the EMA, you'll be taking that, and you are using a small risk. So you hold on to your trade as it starts to reverse. And you see, remember I told you this is a long term. I'll make a note of it because I did this yesterday. I'll make a note of it. This is a long term bull channel. Broke beneath it, came back to test. You could sell beneath that. I mean, you could easily get out of that short here, sell beneath that. When you get a bull candle, market goes above it, you can exit and you could sell. So you're taking small trades. You don't have to take all of them. It's pretty difficult to do that. But really, the rest of the US session for gold yesterday became a scalper's market. Your goal is just to take one, and bank it. Bank 0.25%, 0.5%, whatever the case may be. That would be fantastic. So let's have a look. There are no questions. Thank you very much. And I trust you enjoyed how to trade, or how to trade two things, surprise candles, and also how to trade small pullback bear trend. May I know what's the EMA? The EMA is a 10 EMA. I use the 10 exponential moving average as an indicator of trend strength. As long as the market beneath it, it is strong. If we're going up and the market was above it, then it's strength. That approximates any trend line that you can draw in. So it's a pretty useful one that I use. And I suggest you put it in whatever, maybe don't put it in. You don't want to clutter your charts. If you're looking at price action, very important to do so. Now, if you are enrolled on Wednesdays at the market with George, few other things to show you. We will see you in 15 minutes for our session this afternoon. Thank you, guys. Hope you enjoyed, and we'll catch up with you again. Marlon, thank you, boss. See you guys.